I want to talk about all this and more with David Chase. He is the CEO of the law firm David R. Chase and a former SEC prosecutor. And before we dive in, David, I'm looking at Robinhood results now. The shares are plunging after hours. They missed on revenue. They missed on monthly active users. And there still are certainly questions surrounding some of the regulatory issues here. What do you make of Robinhood a year later after the mania that was GameStop?
Yeah, I would just say how things have changed in the last period of time since it filed its S1 and went public, with all of the anticipation about its revenues and profitability. Clearly the market has punished Robinhood's stock given its performance to date, and certainly apparently continues even after the announcement today of earnings. It creates a situation where a company, in the financial services industry, can deal with regulatory problems, or certainly it makes it easier to do so when revenues are good and things are going well for the company and it's profitable and the market is, rewarding it. Here, though, you've got a tremendous decline in stock price as the volume of activity in these meme stocks have dwindled. I think your prior host indicated that revenue equities trading was down 35% or so. And so with that decline in trading activity, you get the consequent decline in revenues. But also, the regulatory problems of Robinhood apparently have not gone away. There is still apparently an intense SEC interest in this whole notion of gamification of the markets generally, I think including particularly Robinhood's role in that. You still have ongoing class action litigation with respect to Robinhood's decision to restrict trading during the meme stock trading frenzy while it was going full force. In fact, just I think in the last week or two, an individual investor won an award against Robinhood in a FINRA arbitration, only for $30,000, but it potentially may be significant and an indication of things to come based upon an arbitrator or arbitration panel's finding that it improperly or wrongfully, evidently, restricted his ability to trade.
Right.
So, for example, also payment of order flow, which Robinhood has relied upon as a source of revenues, although less over time, is subject to continued regulatory and perhaps even congressional scrutiny. So even though the stock price has gone down and things are tough financially for the company, the regulatory landscape has not changed, and perhaps is perhaps even getting a bit worse.
Meantime, Robinhood CEO on the call talking about new products, and they are launching new products little by little. They want to launch fully paid lending in the first half of the year. They intend to add more crypto services to the platform. Talk to us a little bit about the nuances of regulating a trading platform that is itself also a publicly traded company and the target of retail investors.
Yeah, it gets complicated real fast. For example, the move to expand further into crypto, may be important for the company to generate revenues to make up, for example, for the loss of equity trading and volumes. But that will inevitably bring its own intense scrutiny from the SEC. Gensler, the head of the SEC, in recent comments has made clear his view that, these cryptocurrencies and digital assets, depending upon the particular facts and circumstances, can be securities and should be subject to SEC regulation. So you have that as an overlay on the trading platform, of a publicly traded company that has disclosure obligations given its reporting requirements. And so, like I said, it becomes complicated very, very fast. Robinhood will have to continue to make periodic filings discussing its operations, disclosing material litigation that potentially could impact its business and stock price. And you know, it is running as a platform which is going to be, particularly if they advance further into crypto, I think,
Right.
you know, trending into new territory for sure.
Quickly, obviously, this retail investor phenomenon is not going away, and it's not just affecting Robinhood. More broadly, you know, how big a task does the SEC have ahead, you know, when dealing with, you know, this avalanche of individual investors who want a say?
Yeah, I mean, this is the big issue, and you know, the SEC has a job to one of its main goals is investor protection, but it also has to balance that against the need to have fair and efficient markets. And so, you know, that delicate balance between protecting the individual investor and providing liquidity and efficiency, and also, you know, allowing financial services to conduct business and conduct it profitably, kind of a light type of touch for regulation is also important. So that all has to be sorted out.
All right. David Chase, lots of potential flashpoints to watch for. CEO of the law firm David Chase, former SEC prosecutor. Thanks much.